Hello, my name is Evan, and welcome to Evanomics 101, your number one source for everything economics. Today we're talking about the latest job report numbers, and they were a lot stronger than expected. But here's the problem. Strong jobs might actually be bad news for interest rate cuts. So the big question is, are rate cuts coming, or are they getting pushed back? In today's video, I'm going to talk about three specific things relating to Hello, my name is Evan, and welcome to Evanomics 101, your number one source for everything economics. Today we're talking about the latest March job report numbers. And they were a lot stronger than expected, but here's the real problem. Strong jobs might actually be bad news for interest rate cuts. So the big question is, are rate cuts coming or getting pushed back? In this video, we're gonna go over three specific points or three specific things that are important to the job numbers as they relate to interest rate cuts. Okay, the first thing we're going to actually talk about the March job numbers and what they really mean. Number two, why the labor market is sending mixed signals, and three, what this means for future interest rate cuts. But before we jump in, I do have a quick favor. If you like simple breakdowns that actually make economics make sense, please hit the like button. Share this with someone who may need it, and subscribe so you don't miss out on what's coming next. Most people don't get the opportunity to understand this kind of stuff. So if you do, you're already ahead. Let's go ahead and jump into the March job numbers, okay? So I'm gonna break down the actual numbers as well as some other economic data just to kind of start the video off, and then we're gonna dive a little bit deeper into that. So pretty much your headline numbers for the March report, you got the U.S. that added 187,000 jobs. Unemployment rate came in at 4.3%. Wage growth was about 3.5% year over year. Monthly wage growth slowed down to just 0.2%. Now on the surface, I mean, that's pretty decent, okay? I mean, yeah, it's okay. It looks okay. In fact, this was the strongest job growth in over a year. But here's where it gets interesting. The labor market seems to be really strong, or is something else really going on? You have what looks like job growth rebounded from what we saw in the weak numbers that came out in February. You got wage growth that looks like it's slowing, and labor force participation is declining. So do we have a booming economy? To me, in my opinion, it's a cooling economy. Okay, things are definitely cooling down, but I believe our economy is resilient. Okay, let's shift this focus to the Fed. Okay, the Federal Reserve is watching two main things: jobs, inflation, and right now they're getting mixed signals. Okay, on one hand, you got job growth coming in strong. Unemployment is still relatively low, but on the other hand, wage growth is slowing, and inflation is still around. Okay, I have another video coming out right after this, and we're going to discuss the CPI reading. So the dilemma that you have with all of this, strong job equals inflation risk stays alive, okay? Slowing wages equals inflation pressures might ease, okay? Strong jobs equal inflation risk stay around, slowing wages, inflation pressure might ease. And the March report shows we're not crashing, but we're not fully stable either. But again, are these numbers trustworthy? We know revisions are coming in. For those numbers, a reflection of more than a manipulation from our federal government? I don't know. Possibly so. Quick pause. Is this helping? If this is helping you actually understand what's going on, please hit the like button. Share this with someone trying to figure this stuff out. And subscribe for more. more information on economics, because most people, they don't get a chance to learn how this stuff works, but this is the kind of knowledge that gives you an edge or a step up. All right, let's keep going. What does this mean for interest rate cuts? Are interest rate cuts coming soon? That's the big question, right? Based on this report, probably not. Just being honest. Probably not going to see, in my opinion, I think we will see somehow some interest rate cuts before the midterms. But if we're going based on this data, more than likely probably not going to see interest rate cuts anytime soon. And here's why. You got the economy that added 178,000 jobs. That's strong, especially compared to what happened last month. Unemployment at 4.3%. That's not weak either. Historically, unemployment numbers, 4.3% isn't bad. Inflation is still above target. So the Fed is likely thinking, we don't need to rush. We need to pump our brakes a little bit. Instead, what they're likely to see, what we're likely to see, we're likely to see some rate cuts get delayed, fewer total cuts, more wait and see kind of decisions, okay? In fact, recent data suggests that labor markets is stable enough that the Fed may hold rates steady for longer, like maybe in 2027, okay? The reality of all of this, the Fed is not guessing. They're reacting to the data. And right now, the data says the economy is slowing, but not enough to justify cutting rates yet. So the bottom line is the March job reports showed a labor market that is still somewhat strong, okay? If you believe those, and we just go with those numbers and not the revisions that will be coming. But it does show an economy that is clearly starting to cool. On the surface, it sounds like progress. It looks like progress, but of course, we need to be skeptical. Okay, one strong report does not confirm a trend, because we are still seeing, we still got inflation above target. We got wage growth that is slowing, and a labor market that is not weakening fast enough to force the Fed hand. So while the narrative is shifting towards rate cuts, I know everybody is expecting us to cut the interest rates. The data isn't fully there yet. And if the economy stays this resilient, there's a real possibility that rate cuts, we don't see anything to possibly 2027, like I said. The Fed possibly stays cautious longer than the markets expect, or we might see inflation proves more stubborn than people are pricing in. So instead of asking when are cuts coming, a better question might be, what if they don't come at all? Or what if they don't come as soon as everyone thinks? Okay? Because in the economy, expectations have been wrong before. A lot. And they will be wrong again. Okay? If you found this helpful, make sure to hit the like and subscribe button, and drop a comment. What do you feel about this current March job numbers? Do you think 178,000, when we get the revision, do you feel like it will be revised down a lot? In my opinion, when we do get the revision of specifically our March numbers, as well as just any of our job report numbers, they're going to be revised. Specifically, our March numbers, I'm expecting that 178, I'm expecting them to drop that down a lot. Okay? So, time will tell. We'll see when the revisions do come out. I'll do a video on the revision specifically from the March job numbers, because that's a little excessive. 178,000, I don't know. I don't know if you can believe that all the way. But please stay tuned for more videos. Thank you for tuning in, and we'll see you on the next one.